Most traders have the right strategy but wrong bias. You enter a perfect setup, you get stopped out, and then you watch price go exactly where you thought without you. That is not a strategy problem, but this is a bias problem. In the next 10 minutes, I am going to show you how to align your daily bias with your entry execution so that you can stop being the liquidity for the big banks and start trading with them. So by the end of this video, you will have a systematic way to know exactly which direction to trade before you open your chart. So we are going to dive in, and I'm going to show you how to get your bias correctly before you start looking for entry confirmation on the lower time frame. And I am going to also give a breakdown on all those opportunities you can grab using this same model for your bias. So now on my chart, you can see I have this method, these two methods. These are the two methods I use to determine my bias. I have the CRC method, I have the candle rejection method. I use these two to determine if I am going bullish for the day or I am going bearish for the day. This also is done on the weekly time frame. You can do same thing on the weekly time frame and on the daily time frame. If you want to know how you're going to scale in for the week, you can do same on the weekly time frame. So looking at this candle, right, this is what we call CRT. What is a CRT? This is when price takes out a previous candle, reject and close below. But with my own model, for bias only, you don't wait for price to close. If it close, it's more advantage to you. All you need to see is price taking out a daily high. When you wake up in the morning, mark the low of the candle. Mark the low of the candle and the high of the candle. Wait for price to clear either the high or the low of that candle. Once price clear the low or the high of that candle, now you are interested. You either go to the lower time frame like the 1 hour time frame or the 4 hours time frame. Wait for a break of structure. I repeat, whenever you wake up in the morning, mark your previous daily candle. Wait for price to take out the high of that candle or the low of that candle. You must not necessarily wait for price to close before you determine your bias. If it closes, it's more advantage. Immediately price takes out that high, breaks its structure on the 4 hours time frame or on the 1 hours time frame. You are now interested in that direction. You go with the direction. This is for the CRT. This is for the sell, and same goes for the buy. You wait for price to take the previous candle. It must not be a bearish candle, it must not be a bullish candle. Any candle, it does not matter, the color does not matter. Just wait for price to clear out the low or the high, and then you wait for a break of structure on the 4 hours time frame or on the 1 hours time frame. This is for CRT. Secondly, this is candle rejection. If you have not watched my first video, go and watch to know which key levels to wait for rejection from. Now this line, I assume, is my key level on the daily time frame. All I need to do is to wait for price to reject on any of my key level. After price reject, if it close, it's a more advantage. It does not matter. Just wait for price to reject your key level, break structure on the 4 hours time frame or on the 1 hours time frame. Then you automatically, you are bearish or bullish for that day. You are going to be looking for buys for that day until you see any of this method happening before you can switch your bias. For the next, once I see this happening, I am going to sell for the week. If I get this opportunity for Monday, I am going to sell Monday, Tuesday, until Wednesday will give me either a CRT or a daily rejection before I can switch my bias from a bearish to a bullish market. And for you to identify a valid break of structure, whenever price reject, if you doubt the break, because here we use body to body break to confirm our bias, we use body to body break to confirm our bias. And now we are going to go to the chart and I will show you examples. And before I go to the chart, I am going to talk a little about entry. Whenever you are going for entry, if you don't understand structure on the lower time frame, you will always find yourself entering at the wrong zones, entering at the wrong time. You need to understand what is liquidity and what is structure. Now, these are the type of structure I pay attention to. Whenever I have a bias, I look for these structures. I wait for price to give me this. I will just do this example for buys, so you can do the opposite. You can just reverse and do the opposite. I wait for price to break structure. This is what I need to see on the chart to make this a valid structure, advanced market structure. This is what I need to see. This is a structure type 1 for me. This is when price breaks structure. After price breaks structure, you see it would start by taking out liquidity. We will sweep liquidity, break structure, and then engineer liquidity, which is the first pullback after a break of structure, because a lot of people will be trying to buy from this level. Price will use it as a liquidity. So when you have any key level around here, which if you have not watched my video, go and watch, because I am going to come with a full video on entry. You look for a key level below. After your liquidity, you look for any key level around here. It's a valid key level for you to buy. You wait for price to pull back, and then you take a buy to that direction where your bias is telling you to. You wait for price to come to the downside, tap you in, and push to the upside. This is structure type 1. This is for entry. After you must have confirmed your bias is bullish or bearish, you start looking for this structure. Structure type 2 is this. You wait for price to clear liquidity. After price takes out liquidity, break structure. After it, before it breaks structure, it will engineer liquidity, internal liquidity, before it breaks structure to the upside. This is what I call structure type 2. This is my structure type 2. Now, this will serve as your liquidity. This will serve as your liquidity. Price will now push to the downside, take out that low, tap into this QM or the apex of this, and then push to the upside. This is structure type. This is structure type 2. Now, structure type B is you wait for price to violate. Now, for example, this is a sell. It broke structure to the downside. This is a sell. A lot of people are expecting to sell from here. Now price will now break this structure. After price breaks this structure, it will do something like this. It will give a little bit of pullback and then continue to the upside. This is what I call a continuation setup, which will now create it will now create something here. Can you see a breaker block? What we call a breaker block. Price will create something here. This is a breaker block, and for you to consider this breaker block, you must have a fair value gap. Price must break structure with a fair value gap. You will wait for entry. Price will pull back down here. You can wait for entry confirmation, or you enter directly and you buy to the upside. If you don't understand structure, you are going to find it hard to be profitable in this industry. You are going to find it very difficult to be profitable. And we have other structures I use, which are candlestick structure, which I'm going to do a video on that. So if you are watching this video, make sure you follow me. Now let's go to examples. I'll start from the daily time frame. I need to see something. let's say we start from here. Now in the morning, all I need to do is mark out this low, the low of this candle and the high of this candle, because we know when price take out a low of a candle, we are expecting price to take out the high of that candle. External to external, internal to external. This is what price will always do. Price will take out internal and will target external. Once price take out external, price is going to target external. So price take out this low. All I need to do to confirm that this is valid for me to take a buy, I need to go either to the 4 hours time frame or the 1 hours time frame. Now let's go to the 4 hours time frame to see what we have. Now on the 4 hours time frame, what do we have? We have a break of structure right here. I said here we use body to body break. If you don't understand this, switch to the line chart. You see a break, you see price close above this line. This is a valid break if you trade MS and R. Now mark out your key levels and then you refine on the lower time frame into a structure. For example, I'll just do an example for this. Now let's say this was a fresh key level. I'll mark it. While I move to the lower time frame, I'm going to refine this key level. Let's say this is a key level. Forget about what is happening here. We are trying to to see what happened before price goes to the upside. Now this key level, for me to confirm it is a key level, I switch to a line chart. This is a V-shaped key level, you see. Now let's go to the 1 hour time frame to refine this structure, refine this into a structure. Sorry. Now here I can refine to this structure because it's fresh. I can refine to this structure because it's fresh. Now let me see if I can refine this. I can go to the 30-minute for my final refinement. Now I need to see a structure, else now we have a break of structure. See the structure I'm talking about. We have a break of structure, then we have liquidity right down here. You see, this was a liquidity, this was liquidity. If I zoom it, now you can now look for a fresh key level right down here. You enter from here, which was a missed trade. You enter from here, which was a missed trade. You see price took out this liquidity and then missed this entry and started pushing to the upside, but it took out the liquidity. So let's do another example. Let's do another example for CRT. Now this is another one. I'll just mark out the low of this candle and the high of this candle. You see price push to the upside after taking out this low. Now let's do another one. This is the high and this is the low of that candle. I need to see price take out the low. I just go to the 4 hours or the 1 hour time frame to look for a break. Now let's go to the 4 hours time frame. Now on the 4 hours time frame, what do we have? We have another break of structure. Can you see? After price took out the low, we had a break of structure here. To confirm this break of structure, go to the line chart. You can see price closed above this. Now you can mark out your key level, which is this is a QM, which price bought from, and the QM had a fair value gap. And to see a structure, go to the lower time frame to now look for that structure we talked about, because you must understand structure. After the break of this structure, what do we have? We had a first pullback. You see price took up this low, broke structure, then this was the first pullback, and then what do we have? We had a key level below that liquidity, which caused price to buy to the upside. You see, after this, price have been buying to the upside because we had a bias. Not to make this video long, I'm not going to do a lot of examples, so I'm going to do another one for rejection, and I'm going to do another one for rejection. Let me just do the one for rejection, and then so that this video will not be long. You can see this is for rejection. You wait for price to reject at your key level. If you haven't watched my video on key level, go and watch right now so that you understand what I am talking about. Now after price rejected this key level, all I need to do is to go to the 4 hours time frame or the 1 hour time frame. If I don't see a break on the 4 hours time frame, then I'm going to go to the 1 hour time frame. Now let's check the 4 hours time frame. On the 4 hours time frame, what do we have? We had a break of structure right here. Can you see? We had a break of structure, even though price did not pull back. This happens. It happens, but you had a direction, and you can use the lower time frame to look for those structures to buy. Now let me go to the 1 hour time frame to see. See, price was just buying to the upside, just buying to the upside, buying to the upside. Let's look at another example. Let's look at another example. This is another one for sell. You can see price took out the high of this candle, and also you can see price took out the high of this candle. and also we had a rejection. We had a rejection on this key level. So two methods together. Now after price reject and took out that high, I just need a break of structure on the 4 hours time frame or on the 1 hours time frame. What do we have? We have a break of structure right here. Always use line chart. Always use line chart. Now if I go to the line chart, can you see this was a break of structure? We broke structure, first structure here, we broke two structures, making it a high probability. We broke structure 1 and structure 2 right here. Now what am I going to do? I am going to mark out my key levels. This is a QM. I'm going to sell from this QM, or you can take your fib from here to the downside. You are going to buy from you are going to sell from the premium zones. And if you go to look for those structures I talked about, you're going to see them there. You're going to see them there. Always try to understand structure. After the break of the structure, we had what? Liquidity right here. This was liquidity with a fair value gap. This was an internal liquidity, and you can enter from any key level like this QM. You can, if I'm the one, I'll enter from this QM, and my stop loss above here. Let me do the last example. Now let's say this rejected, price rejected this key level. After price rejected this key level, I need to see a break of structure on the 4 hours time frame. Now on the 4 hours time frame, what do we have? Can you see price broke structure before tapping on? This was the rejection and this was the break. Now after price broke structure right here, switch to the line chart. Switch to the line chart. Can you see? I switch to the line chart. We had a break of structure right there. Now what are we going to do? We are going to mark our key levels and look for structure on the lower time frame. Now let's look for structures and see where we can buy from. It must have a structure. If there is no structure with all those things I mentioned, then this setup is invalid for me. So let's refine this key level. Let's go to the 30 minute. If I don't find a good structure on the 30 minutes time frame, then this trade is not for me. Can you see? Can you see? We had a break quite all right, but now there was no liquidity for me to buy, and there was no key level right down here. So that is why price took out this low, because there was a break of structure, but there was no liquidity and there was no fresh key level. That is why price needed to take out this low, because there was no liquidity available. That is why price had to take out this low and then broke structure and continue buying to the upside. So if you love this video and you want me to do a lot of examples, make sure you like and then ask any question about this video, anything you don't understand, and I'll make a video on that. Peace out.